Hey everyone, this is Lydia, and welcome to my channel where you don't have to be rich to be financially free. As always everyone, I am not yet a financial advisor, so everything in this video is for entertainment and educational purposes only. If you are new here, welcome, and thank you so much. I really appreciate it. And so let's get started talking about investing. Today we're here to talk about how to invest your money wisely, and once again we're starting from our budget, because the budget is what's going to tell you how much money you have to spend every month on your investments. You can dollar cost average into multiple investments at once depending on how much money you have. You should already know how much money you plan to invest, and on this sample budget here, a link to the budget and the template is in the description below. It's really important to know the difference between your liabilities and your assets, because investments are assets, okay? Physical cash savings, you need to have that for a rainy day, but your investments are specifically for assets, not for bills, not for new car. Liabilities depreciate in value. Assets increase in value. You should have some automatic transfers set up to maximize those investments. How do you plan those investments? Are they long-term? Are they short-term? All of these things depend on your age as well as the amount that you have to invest. Another very important thing is knowing your risk. So even if you have several $1,000s, how much of that are you going to be risking? You should probably limit it to total account balance, maybe 1% a day if you want to be conservative. So if you have $10,000, that means you're only risking $100 a trade. If you want to keep just a very solid, steady portfolio balance, this is how conservative you need to be. People with lots of money to invest have more to diversify, they can take more risk. Also, young people can take more risks. If you're older, you need to keep a larger percent of your income or your investments and all of your assets safe. Think of your age as a guideline to the percent. If you're 51% of be allocated towards stable assets like gold or even like annuities because they have a fixed value, or in an interest savings account. I prefer to use crypto interest savings because you can earn a much higher return on your investment with them. Look at how big the stock market is. It's quite large. United States alone is very impressive, boasting, yeah, I'm reading that right, $46.4 trillion. That's pretty cool. You can lose your money. However, many people choose to invest in stocks because the money has an opportunity to multiply when it's held for a 10-year period. And one of the ideas of investing is to create generational wealth. This is something that you do with real estate, but stocks can do that as well. Starting a company can do that as well. On the borderline of trading stocks and real estate are something called REITs, real estate investment trusts. I like to invest in REITs. It's a way to fulfill that goal of investing in real estate and still receive dividends from these large commercial investment portfolios. I got like a $3 dividend payment the other day, which was kind of cool because I did nothing for that $3 other than invest with them. Imagine that on a much larger scale. Having millions of dollars, you're never gonna know how to invest it until you start investing now with what you have. That's one of the differences of people who are maybe looking to be financially free but aren't exactly wealthy. The key difference is having a grasp on our finances and how to invest wisely. Real estate. Buying real estate is a fantastic way of creating generational wealth. You can now give something to your children that whether or not they want to live in it, they could rent out this property and expand their ability to earn money and to earn income and to have something to pass on to your grandchildren or their children, and et cetera, et cetera. For example, let's say and you've started a business, you've bought some land, you've bought some houses, and you have 4 children. One child can take over the business, one child can have some land here, another child can have one of your homes and rent it out. These are amazing things that we think of in a negative way, like trust fund babies, not in the terms of woke up in a new Bugatti, okay? I'm not talking about that kind of trust fund. I'm talking about having safety and peace of mind for yourself and your children and your children's children. But that's such a blessing to be able to create that and give that even when you're starting with $1,000, $100 a month in your investments, come at it with that attitude that you want to create generational wealth. Next, we have precious metals, gold, silver, palladium. Currency is printed when governments have debt and it can become devalued. something like gold or silver retains value. That's the main point of buying these sorts of things, and why a lot of governments and large companies keep their cash, their value reserves stored in gold, having large safes and vaults full of gold, because it's a hedge against inflation. What we're talking about is cryptocurrency and crypto assets. So you can buy cryptocurrency with your debit card, and that's probably the simple answer that most people are going to tell you. But the best answer when it comes to making money with cryptocurrency or to investing in cryptocurrency is also with your time. When you're getting paid in dollars, that dollar is decreasing in value every year. We're seeing lots of crypto ETFs and mass adoption taking place at many different large institutions. It's very exciting. And if you're coming to the party now, you're still not late. You're welcome. You're going to benefit massively. Something else a lot of people don't know about, it's called infinite banking. It's a very effective tool for taking loans and not having to pay taxes on it, not having to pay interest on it. When I first learned about it, it was called banking for the wealthy, using life insurance as a financial vehicle to protect your wealth from taxes, create a source of long-term income for yourself and an inheritance. Let's say you have $600,000. Basically, you take a large chunk of money and you want to put it somewhere safe. You want it to grow. You can buy a whole life insurance policy, which means it's for your whole life, or something called an indexed universal life insurance policy. And you have to avoid meching it, which is an industry term. The life insurance company or your life insurance agent will help you plan how high your death benefit needs to be to match the payments that you're going to be making to go into your policy. And the idea is the cash that you originally put in to fund your life insurance policy, that cash is going still to your account and it's being invested. It's growing at a certain rate because the insurance company needs to make money, which means your money is making money. And legally, the way this works is because there's a clause in insurance that says you can take a loan against your cash value in the account. So you might have to wait a few years, but the idea is if you put $20, $30, $50, $100,000 into one of these policies, you now have several million dollars in your death benefit, but your cash value after a few years becomes like a bank for you. That's where the concept of infinite banking starts. When you take this loan against your cash account, okay, you can pay it back or not. And whatever you don't pay back is subtracted from your death benefit. When you die, you can use it to buy a house, you can use it to start a business, whatever. It's something that not a lot of people know about. It even maybe sounds sketchy at first. It's coming from a non-taxable asset, which is your life insurance. There's one more thing you consider an investment, that would be foreign exchange, Forex. And I don't really like Forex, I gotta be honest. It's a lot more work than it's worth. You have to be really good to make money at this, which is why I don't exactly consider it an investment. However, if you do understand a market deeply or a currency pair deeply, it can be a really good investment choice. It's a bit of a gray area because a lot of the things I've talked about in this video are not for people who want to be full-time day traders. Remember, I'm not a financial advisor. I don't know what your scenario is, what your situation is. Everything and everyone might have something that works differently for them. Maybe you prefer stocks. Maybe you prefer to buy real estate and rent it out. Depends on where you are, how much money you're starting with, or how long you've already been in the game and what you're working with in terms of money to play with, you know? If you enjoy this content, please hit the subscribe button and click the notification bell. It helps me improve this channel and I am so grateful for the opportunity. If you haven't already, please like, subscribe, and comment below. Thank you.